What's up YouTube? Welcome back to my channel. For those of you that don't know me, hi, my name is Miguel and I'm a long-term dividend investor sharing my journey to $100,000 dividend investment portfolio. And I'm taking y'all along for the journey. In this week's video, we're going to be doing a portfolio update for y'all. Like I said in last week's video, I have about 3 weeks worth of buys to share with y'all because I did go on vacation for about a week, and so I chose to hold off another week on doing a portfolio update so I can do a portfolio update this week. But before we get into that, don't forget to subscribe to the channel if you have not already. Leave a like on my video, it helps out my channel tremendously, and comment if you have any questions. I will get back to you. Now let's roll the intro. Now before we get into the portfolio update, I gotta give a big shout out to Henna K as well as to Wilmu. I'm gonna call you Will H if that's cool. They both use my link that I'm gonna have down below to sign up for Robinhood to give them each a free stock, as well as to give me a free stock. So big shout out to them. If you have not signed up for Robinhood yet, you can do so in the link below. And when you use my link below, we both get a free stock, so it's a win-win. If not, you're missing out on free money. But the one stock that I got from Henna was I got one share of LLNW worth about $2.65. And then from Will H, I actually got 3 free stocks. I think the difference in that is that Will H actually put money into his account, so it gave 3 free stocks instead of just the normal 1 stock. But the 3 stocks that I got was I actually got 2 shares of LLNW, as well as the third stock being AGEN, worth about $5.62. Now when I do get free stock, I like to hold on to it for about a month or two, see how the stock performs before I decide if I want to sell off of that stock or not, because it is free stocks in the end. But more than likely, I'm probably going to sell because these stocks haven't been performing too well. But big shout out to Henna K and William H. Again, if you have not signed up for Robinhood yet and you want to sign up for Robinhood, use my link down below and you and I will both get a free stock. Now hopping into my portfolio, as we can see, I am filming this on a Sunday, so the market is closed. But as it currently sits, my portfolio is worth $11,577.55. If we go to the week, I'm down overall $42.31. or 0.36%. On the month, I am up $241.20 or 2.13%. On the 3 months, I'm up $300.30 or 1.75%. On the year, I'm up $1,527.55 or 15.2%. The year is going to be the same as the all-time because I have been investing for less than a year. It's actually going to be a year in September. Crazy how time flies. And the fact that I have a 15% return on a year plus dividends, that's not bad at all. Again, I still consider myself a beginner and this is a learning process, and hopefully I get better as time goes on and I have greater returns. So hopping into the buys that I have been making for the past 3 weeks now, like I said in the last video, I've been stuck at about 15% return, and I have been really looking for a way to break through that barrier, and I'm going to go through my buys right now so that I can tell you how I think this is going to help me smash through that plateau. So the first buy that I did was actually bought another share of Pembina. I bought that 1 share of Pembina at an average cost of $30.50, and then going into Pembina, I now have 10 shares at an average cost of $25.58. I'm up overall $64.73. or about 25%. Pembina has been a good solid energy sector stock in my portfolio that has given me some pretty great returns and has given me some pretty good dividends. So I'm going to continue to dollar cost average into Pembina. They are one of Canada's biggest energy companies, and I really think investing more into the energy sector is going to help me push past that 50% plateau. The next purchase that I did was Hormel Foods. I bought 1 share of Hormel Foods at an average cost of $48.87. And then as we can see, going into Hormel Foods, I now have 13.06 shares at an average cost of $46.79. I'm down overall $17.06 or about 2%. If you don't know who Hormel Foods are, if you go to the lunch meat section of a grocery store, you're going to find Hormel Food products. That's why I'm investing more into Hormel Foods, even though I am down right now. They are an extremely volatile dividend stock. I knew that going into Hormel Foods, and I'm completely okay with that. I'm just going to dollar cost average into Hormel Foods, continue to collect those sweet dividends, because I know at the end of the day, everyone's going to continue to go to the grocery store and everyone's going to need these lunch products. So I do believe once Hormel Foods comes back up, I will be positive and I will have a lot more shares at a cheaper price. The next purchase that I did do was for Costco. Now I bought $76 worth of Costco at an average price of $416.57, which gave me 0.18 shares. And then hopping into Costco, I now have 1.54 shares at an average cost of $382.21. I am up overall $89.57 or 15.12%. So if you've been following my channel, you know that I just started investing into Costco about 2 months ago. To have a $90 return is insane. I knew I wanted to invest into Costco for a very long time now, Not only do they have a solid dividend yield of about 3%, but they're going to continue to blow past their estimated revenue reports quarter after quarter after quarter. And I do want to own at least $1,000 worth of Costco in the near future, so that way it can help me push past this 15% return hump. I cannot rave enough about Costco. The next purchase that I did make was buying $101 worth of Microsoft. That $100 gave me 0.35 shares at an average cost of $285.81. And then going into Microsoft, I now have 3.42 shares at an average cost of $219.34. I'm up overall $239 or 31%. I mean, what else can I say about Microsoft? They're an amazing tech company stock. If you have been following me on TikTok, you know that I have been talking about the possibility of another market crash, and which specific sectors in the market did well during the last crash. And tech companies not only excelled, but they boomed during the last crash. So of course, I'm going to continue to pour money into Microsoft as well as Apple, because these sectors do amazing year after year after year. Speaking of Apple, that was actually one of the other purchases that I did do. I bought $50 worth of Apple, which gave me 0.34 shares at an average cost of $145.89. And then going into Apple, I now have 5.27 shares at an average cost of $121.27. I am up overall $130.34 or about 20%. Again, I can't rave about the technology sector enough. Microsoft and Apple are like my bread and butter recently, but I'm going to continue to buy into Microsoft and Apple. Even if the stock market doesn't crash, I'm still prepared, and I still do think that the tech sector is going to do amazing in the next couple of years. I mean, the fact that these two stocks are my greatest returns in my entire portfolio kind of says something. But yes, I'm going to continue to dollar cost average into Apple. And then the very last purchase that I did buy last week was buying some Chase Bank. So I bought $67.94 worth of Chase Bank. That gave me 0.43 shares at an average cost of $155.55. I now have 2.6 shares of Chase Bank at an average cost of $128.39. And then I am up overall $75.77 or about 22%. Chase Bank reminds me a lot of Costco in the way that it's a pretty solid dividend stock company that I consider also a growth stock. Not only do they pay about a 3% dividend yield, but they too have been killing their numbers quarter after quarter after quarter. But I do think that Chase Bank is going to continue to be the main stock in my finance sector of my portfolio. That is all that I have for y'all this week. I hope y'all enjoyed it, and I hope y'all are following along my journey to a $100,000 dividend investment portfolio. The exciting thing that I have been mentioning in my TikToks recently is that I am going to be getting to that $100,000 by using the drip method. If you don't know what the drip method is, it's basically reinvesting those dividends that you get just for owning the stock. So by using the drip method and putting in only about 40% of my money into this $100,000 portfolio, which is around $40,000 of my own money, the rest of it is going to come from dividends. So I'm just super excited to share my journey because I'm just an average guy like you. And here I am about $11,000 later, and about $2,000 of that money is not my own. That's just dividends, and that is just dividends and market growth. It's pretty exciting to see. I'm only a year in, but I hope y'all enjoy this content, and I hope y'all continue to follow along my journey. With that being said, don't forget to subscribe to the channel if you have not already. Leave a like on the video, it helps out my channel so much. And comment if you have any questions. Anyone that comments knows that I will reply to you. So until next week, I will catch y'all. Peace.